In Stacking Up today, I'm so proud to have an options trading celebrity on the show today. Lawrence McMillan is known everywhere. Right now he happens to be the president of McMillan Analysis Corporation, but of course a great author as well. So great to have you on the show.
Thanks for having me.
So I can't wait to get your take on the market. What do you think is happening here?
Well, I'm still basically bullish. I mean, that little correction we had was, I think, just kind of worries about the Fed, but most of the indicators that we're following are still bullish. I mean, the breadth has gotten in line. Cumulative breadth made a new all-time high, so ahead of the market, which hasn't done that for a couple of years. VIX low VIX is good. So as long as it stays low, it's fine for the market. And we look at put call ratios; they've given buy signals too. So everything's in line except for new all-time high. I'm looking for that pretty soon.
How bullish are you? Do you have a price target for the end of the year?
I don't really do targets. We usually run our speculative trades with trailing stops. So we'll just be long calls and keep rolling them up as...
Make sure your big exposure to this potential rally that could happen.
Exactly. But, so that's, that's the main thing we're looking at right now in terms of S&P.
Are there any indexes that are showing some unusual options activity or volume?
Right. Well, one we always keep an eye on is VIX. With VIX this low, the futures are pretty expensive. So, they're trading at a big premium. So we do a strategy there where we'll basically buy VIX puts and buy SPY puts. That's a hedge. So if, and you have a built-in 3-point, cushion because VIX futures are 3 points overpriced here, 3 points premium right now with a month to go. So the VIX puts price off the future. So it's like the underlying is going to go down by 3 points if nothing else changes. But in case the market collapses and VIX goes up, we've got the SPY puts as a hedge.
Is it an especially good time to hedge a portfolio right now for the average investor?
Yeah, I think it is, if you do it the right way. Too many people, I think, try to hedge like a little move, like a 5 or 10% move. That kind of protection is very expensive. And you can't do that for too long. You'll start to hate yourself because your returns will be, decimated. I think you would buying fairly deep out of the money VIX calls as a disaster hedge is much better. Everybody can withstand like a 10% decline. That's not going to kill you. But if you get to 40% decline, that's the one that hurts. So if you buy VIX calls, say 30, 50% out of the money, and just think of it as insurance, cheap insurance.
And there you have it from a professional. Thanks so much for coming on the show.
Thanks for having me.